this to light. The second transaction is posted to light. So I'm going to go over here in light account. Notice we're off by that amount, the 6.5, and say that equals this credit. So now our subsidiary ledger adds up to what is on our trial balance, and we tie out there. So this account needs to be backed up by who we owe, so we know who to pay as we go forward. So now we're going to go to the next item here. Also note that this term means 2% discount if we pay within 15 days. Otherwise, within 60 days, the payment needs to be made. We don't need to worry about the 2% discount now. We do need to worry about it if we pay it within 15 days, which we probably will do. Alright, so then we're going to say 7/11. Receive 500 credit memorandum from Light Company for the return of part of the merchandise purchased on July 9th. Alright. So what that means is we are returning part of our merchandise and getting a credit memorandum. So we can ask the question, is cash affected on this one? And you would think that if we return something, we're returning it for cash. But in this case, the question is, did we actually pay cash yet, or did we buy it on account? And in this case, we bought it on account. So cash, we didn't yet pay the cash. It's still kind of like on our credit card bill, if that was how we bought it, right? If you can think of the account, and that's the payable account. But once again, we might want to think about the other side of it, what we gave up in this case, because it might be harder to see which way the payable account should go. And what we gave up is merchandise inventory. Merchandise inventory has a debit balance. We gave it away, therefore it must be going down. How do we make something go down? We do the opposite thing to it, which in this case would be a credit. So we're going to reduce the inventory because we gave it back by the amount that we gave back, which was 500. And then we have to debit something 500, and that something would be cash if we were getting the cash back, but in this case it's the payable. We're reducing the payable. Payable has a credit balance. We're going to debit it, making it go down, making sense because we owed less money because we gave the merchandise back. So that will be the transaction. Let's post this out. So we're going to go to accounts payable. I'm going to double click on it, going to go to the end of it and say plus, then point to the 500 here and enter. And then we're going to go to the merchandise inventory, double click on it, go to the end of it, and plus, and go to the merchandise inventory here. Now if something gets messed up and you have to figure this out, you could go to the merchandise inventory and say what's in there, and all this stuff is in there. If you want to use these arrows here, then they are in the formulas tab and they're right here. If you want to put them on the quick access toolbar, you can add to the quick access toolbar like this. And if something gets out of whack, I mean if we deleted the whole thing, then we would just have to say equal and point to all the merchandise inventory. Merchandise inventory is here, merchandise inventory is here, plus merchandise inventory here, plus merchandise inventory here, plus merchandise inventory, plus this one, right? And we'd have to post them all there, and then we can verify that they're all there by using these arrows and seeing where they are. It's also helpful to go this way and say, did we post everything out going this way? And did we find a home? Did we find a home for all of these? And then we could find if we missed anything in that way. So the last thing we need to do with this accounts payable journal entry is to say that, okay, this happened to Creek, and so this amount here, if we go to the subsidiary ledger and say that, and we return the merchandise to Light Company. So now we're out of balance here because we got 9,000 here and 8,500 here, and that's because of this difference to Light Company. So we're going to put the debit now, reducing the amount that we owe to Light Company. So Light Company, we owed them 2,500. We're going to reduce it by the 5. Now we owe them 2,000. Now we tie out to what's on the accounts payable ledger, 12. Receive the balance from Creek Company for the invoice dated July 2nd, net of the discount. So if we think about this, we can first think about, is cash affected? And we're going to say, yeah, we received cash. Cash is a debit balance. We're going to make it go up by doing the same thing, which in this case would be another debit. So we're going to increase the cash. And what they're paying us is because that we did work in the past, meaning we gave them the product in the past. Therefore, we're not going to credit sales. We are we are going to credit the receivable, meaning they're reducing the amount of money that they owe us. So we're going to credit the receivable here. But the fact is that they're not going to pay us the full 1,000 because they paid us within the discount period. So how much cash are we going to get then? We can calculate this a couple different ways. We could say that they owed us $1,000 and we have a 2% discount. So we can say that times 0.02, that's the amount of the discount, $20. So if we took the $1,000 minus the 0.02, minus the 20, that would mean we're going to receive $980. We can also do that with one calculation. We can say, well, if we got a 2% discount, we could take 100% 1 minus 2% 0.02 means that we're going to collect 98%. So we can take 98%, 0.98, move the decimal over 2 places, 98% times the $1,000, and that would be the 980. So the cash that we're going to get is going to be equal to the 1,000 that they owe us times 0.98. Okay, and the receivable, however, can't just be 980, because if we put 980 and we reduce that, then they would show that they would still owe us 20. We got to show that they don't owe us anything. The receivable needs to come off the books for the full 1,000. So receivable has a debit. We're going to credit it for $1,000. Therefore, in order to make our debits and credits even, we need the discount of 20. Now, we know that there's 20 because this minus this is 20. We need a 20 in order the debits to equal the credits. We also can calculate the 20 by saying it's the 1,000 owed times 0.02, the discount 20. So now the 980 and the 20 equals the 1,000. And I know I don't have my debits and credits in debits on top and credits on bottom. And that's kind of a rough rule. You don't really have to do it that way. You might want to do it in Connect to make sure it comes out okay that way. But if it makes more sense to you to format things in a different way in order to understand the journal entry, then that's more than fine too. As long as you have it in the right column and you're posting it in the right area, it will work. Alright, so then where does that 20 go to? It's going to go to the sales discount that we are providing. So we're going to have to copy that, and that's going to be the sales discount. Why is it going to sales discount? Because you would think that we recorded the sale at $1,000, and you would think that that's not really what we got. We're only going to get $980. So you would think that we would reduce sales, but we don't generally reduce sales. Sales only goes up. So we made up these other accounts basically that are kind of sales reduction. They're contra sales accounts, and that's going to be the sales discount. So we're reducing the sales basically by putting it into this discount account. All right, so let's post this out. So I'm going to double click on cash. I'm going to go to the end of it and plus and point to the cash, and cash is going to go up. Then we're going to go to the accounts receivable. I'm going to double click on the receivable, go to the end of it, plus, and the receivable is going to go down to 0. That's a debit. This is a credit. It's going to go down to 0. Then we're going to go to the sales discount on cell M11 equals, point to the 20 discount, puts us back in balance, brings net income down. We also need to record that in our subsidiary ledger. So I'm going to go over here to our subsidiary ledger, and in Creek, I'm going to say equals, and there's the credit. That's going to make it go down. So now we match to the receivable in the trial balance, and they no longer owe us money. So notice that we had to put the 1,000 there, not the 980 that we received, in order to bring it down to 0, reflecting the fact that they don't owe us any money. So now I'm going to put my cursor on here, and I'm going to left click and highlight to K, unclick, and right click on the selected area and unhide. Then I'm going to hide this side just so we don't get confused over here. I'm going to hide that. And we are now on 716, which says that pay balance due to Bowden Company within the discount period. So now we are paying within the discount period. So is cash affected? Yes, cash has a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case would be a credit. So we'll credit the cash, and I won't know what exactly we're crediting yet, but I'll put that on the bottom for the credit. I'll actually put it here. And then what are we gonna debit? Well, why did we pay for something? Because we bought something in the past, and now we're paying it off. So we're paying off what we owe. What we owe is represented by the payable account. Payable has a credit balance. We're going to do the opposite thing to it. We're going to debit the payable. So I'll put that on top. So how much did we owe to 716 for Bowdoin? If we look at our subsidiary ledger, we can see that Bowdoin, we owe 6.5 to Bowdoin. And we know that we paid within the discount. So if we think about the discount period here, we're going to say, okay, 6.5 we owed to Bowdoin. The discount is 2%. So times 0.02, that gives us 130. So how much do we pay? 6.5 minus 130. And that gives us the 63.70. We can also think about it this way. If we got a 2% discount, then we can take 1 or 100% minus 0.02, gives us the 98%. So if we got a 2% discount, we paid 98%. If we move the decimal over 2 places, 98% times the amount of 6.5. So that gives us the same amount that that we actually paid. So we could calculate that first. So we could come over here and say that the payment, and I'm going to do it with a negative of 6.5 times 0.98. So that makes us a credit. That's how much cash we paid. And then we have to take it off the books though for the full amount. We can't take it off the books with a debit of the 6.370. We need to take it off for 6.5. So the debit is going to be for the full amount, 6.5, to bring this down to 0. Therefore, we have a difference here, of course, and that difference means that we need another credit. It could be calculated as 6.5 minus the 6.370, or it could be calculated as the 6.5 times the discount, 0.02, gives us the 130. I'm going to make that a negative. And so therefore our two credits add up to our debits. Our debits equal our credits. They both add up to 0 if you highlight the whole square. And the question is, where does that go to? And you might be thinking, well, that should go to a discount or something. But in this case, what we are doing, it's our purchase of inventory. So we thought we purchased the inventory for 6.5, but we really only purchased it for 6.370. We had the inventory as on the books at 6.5. We need to reduce it down to what we actually paid. Therefore, inventory is what it's going to be reduced. So that has a debit balance. We're going to reduce it by doing the opposite thing to it, which in this case is a credit. So we're going to post that there. Then I'll post that out. We're going to go to the accounts payable here. Going to double click on it, go to the end of it, plus go to the payable, bring that down. Notice that's here. We're out of balance because we also can post it here to Bowdoin and say that the accounts payable is here. Going to bring a payable down. Now the 2 equals the 2 up here. Then we'll post the cash. I'm going to double click on the cash, go to the end of it and say plus, and go to the credit and enter. Brings cash down. Merchandise inventory is going to be right here. Double click on that, go to the end of that, plus, and go to the credit and enter. Puts us back in balance there. So now we are on 719, which says that sold merchandise that cost 1,002 to art company for 1,008 under the credit terms 215 and 30 FOB shipping point. All right, so is cash affected? In this case, no, because we sold it on credit terms. Therefore, we didn't get cash. We got the second best thing, which is a receivable they owe us in the future. Receivable has a debit balance. It's an asset. We're going to make it go up because people owe us more money by doing the same thing, which in this case would be another debit to the receivable for the 1.8, the sales price. Then we're going to credit something for the 1.8. And why do people owe us money? Because we did work. We gave them something. We earned it. And therefore, that's sales or income or revenue. Revenue has a credit balance. We're going to make it go up by doing the same thing to it, which in this case would be another credit. So keep in mind those two are related. And then you're probably thinking, well, what about inventory? And a lot of people get those two mixed up. You want to think of it as two different transactions. This is similar to the service transaction. But now, of course, we gave up inventory and we used it. We're going to convert the inventory into an expense because we consumed it in order to generate revenue in the same time period, which is the definition of an expense. Inventory is a debit balance. We're going to make it go down by doing the opposite thing to it, which is a credit. We're going to skip a couple lines in order to do that, put it on the bottom. And we had a cost of the inventory of a credit of 1,200 on merchandise inventory for 719. We're going to debit something for the 1,200, and that debit will then go to the cost of goods sold, which is basically an expense account. Expenses have debit balances. They generally only go up. We're going to make it go up again by doing the same thing to it, which in this case is another debit. So I'm going to make this large and post it out. So I'm going to go to the receivable account here, double click on it, go to the end of it,